Holy smokes, everyone. People's bank accounts are being drained at a rapid pace, and you need to hear what is causing this. Because there is a huge problem going on right now where people's purchasing power is getting destroyed and they don't even know it. And if people's bank accounts keep getting drained at this pace, this is going to spell disaster for the economy and the markets in 2022. Okay, everybody, so let's not waste any time. Let's get straight into it. Have a look at this, everyone. This is the personal saving rate in the US. Now, what is something that we saw in early 2020? We saw in March, people's savings rate absolutely skyrocketed to 33.8%. Then it declined rapidly in November 2020 to 13%, but it rebounded in March 2021 to 26%. But now look what's happening. People's savings rate is plummeting due to inflation and due to the stimulus going away. This wasn't, people just all of a sudden saving lots of money or they're earning more money. All this savings right here was due to stimulus and money printing. And this caused the boom that we're seeing in the markets and the economy right now. But this signal and indicator shows that it's fallen to 6.9% and is now starting to fall below trend. And if this continues to fall at this pace, this is going to be very bad for the economy and in the markets in 2022. And this is why. Another chart, everybody. This is the reason why it seemed like the markets have only gone up since March 2020. Because look what happened. This is the rate of the M2 money supply. So this is pretty much just how much they're increasing the supply of money. It went from around 6% in February 2020. And this is when you saw all the money printer memes come out and everyone's like, get out of cash, which is completely true, and buy gold and buy stocks and buy pretty much anything besides a dollar. They increased the money supply, as you can see here, by 27%. But just like people's savings, now that the money printer is turning off, the money supply growth rate is starting to fall to just 13%. Still very high, but we can see the trend is it is declining. So we can see that people's banks and savings are being drained rapidly. We can see that the growth rate of the money supply is slowing. But there was another big thing that lifted up the markets and is pretty much holding up the markets. So really the only thing holding up the markets right now is this. Of course, we need to talk about the Federal Reserve's balance sheet. Now, I'm sure you've already heard about this, but people, this cannot be understated. Look what happened in 2008. It went from 900 billion to 2 trillion. People at that time were saying, look, they're giving out too much money to the banks. They're bailing out the banks, blah, blah, blah. It's too much. They can't do this. Well, look what happened in 2012. They continued to print money when so-called the economy was recovering and everything was going great. And they increased their balance sheet to 4.4 trillion. So again, doubling it from 2008. Then they tried in 2018 to bring things back to somewhat normal, and they started selling off their assets, meaning they're selling off their mortgage-backed securities and their US treasuries, aka government bonds, IOUs. But this caused a 20% stock market crash in 2018 when they started lifting interest rates. And then, of course, what happened shortly after. In February 2020, they absolutely sent their balance sheet skyrocketing. And people, the Federal Reserve's balance sheet and the stock market is 100% correlated, which I've shown in many charts before. We can see it pretty much just went vertical in just a matter of months from February to June. And it has continued to climb and climb, and now their balance sheet is approaching $9 trillion. Are you starting to get the picture, people? Do you think this growth in balance sheets is a real free market economy? No, this chart proves that the Federal Reserve is completely manipulating the markets and rigging the markets, and pretty much the markets are turning into a borderline Ponzi scheme with the Federal Reserve manipulating it. And this is why we need more free market fundamentals. And this is why people like myself have put out warnings that, the fundamentals and the math is saying that a big correction is on the way look like fools, because we're using this logic based on a free market that isn't manipulated. But as we can see here, it is being 100% manipulated. But that's all about to change in 2022. Because like I was talking about here, and like the Federal Reserve is finally starting to acknowledge, is is inflation is starting to erode away people's purchasing power and is eroding away people's savings. And this is going to have big consequences for the economy because people just simply aren't going to be able to spend with prices going up and them having to use all their money, use all their stimulus, all their savings that they had from last year. They're not going to have much money to spend after Christmas in 2022. So we're going to see things like this, the M2 money supply growth rate in 2022 fall. The Federal Reserve may be forced to sell off some of their asset purchases. And probably the biggest tragedy of all, we aren't going to have many more money printer memes. So everyone, what does this mean in simple terms? Well, like I said, the only thing that has been lifting up the markets in 2020 and 2021 was all that stimulus, which I showed you on the charts, with people's savings being boosted by stimulus checks. But now due to inflation, rising costs, people's bank accounts are being drained, and this is all signaling to a recession in 2022 with consumer confidence absolutely plummeting. But it wasn't just the government fiscal stimulus with the stimulus checks. Like I showed you in the charts, the money supply went absolutely parabolic, increasing 27% in 1 year, and also the Federal Reserve doubled its balance sheet in a matter of months. Of course, that meant that asset prices had to go up. But simply, this crazy growth is not going to happen in 2022. And if inflation stays at this level, the Federal Reserve may have to lift interest rates much sooner, and the narrative of there is no other alternative may finally start to change. So everyone, I just wanted to share these few charts with you that can give you some indicators and some ideas of something we might see in 2022, but this is just going off the current data. Things can change very, very quickly. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like button and subscribe. And of course, I'll see you all in the next video.